Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, August 2nd at about 1:15 p.m. Eastern. Well, the NASDAQ composite plunged into a correction today, falling more than 10% from its July peak after weak employment numbers aggravated worries of a slowdown in the U.S. economy, while Amazon and Intel's downbeat forecasts dampened sentiment. The S&P 500 is hitting its lowest level today since July 11th, and the Dow is on track for its biggest two-day percentage fall since early March 2023. And on that less than cheerful note, let's go on to three charts that give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at an even $531, down nearly 10%. Here's the all-time high up here. July 16th at $584.86 was the all-time closing high for the SPY. And now we see that it's all the way down here to 531, again over just about 10% from that all-time closing high. Now we know that after making that high, the SPY dropped down to the 20-day moving average and actually closed below it, but we thought, well, no big deal. Then it rallied back up over it. Then it dropped down right here on, this was a kind of a telling candle on July 24th. It closed just atop its 50-day moving average, and it closed at $541.23. Now that particular candle was, gap down, move back up, and then sit on the 50-day moving average, and it's a big red candle. That's kind of like a uh-oh. Anyway, it continued to consolidate pretty good along the 50-day moving average for the next few days, then gap down today to where you see it now again at 531. Now, from our open this year, back in January, it's not on this chart, to our recent all-time high up here, we know that the SPY gained about 17% for this year, and that's really good. That's a great gain. Now, however, we are getting the reminder that the market does not move higher forever. It moves in cycles. To establish some guidelines here as we look at this chart, though, let's see where we want to put some lines here. The S&P 500's nearby resistance right now is, of course, today's high, but it's up here at the 50-day moving average at $543.58. That's where the 50-day is coming in. Then we can see the 20-day moving average just above that and yesterday's high. And so this can come in. We can call this 555. That's more resistance here. Then up to July, then, all the way up here is going to be, it's kind of a big red candles for the last 2 weeks. So it's all probably going to be pretty much resistance until we get up here to 565, 566 at the July all-time highs. So that will be a resistance line, at least potentially. Now, let's say, well, let's do something positive here. Where's the support lines? Support lines are, let's see, today's low, and that is so far at 528.60 right here. Then the May pivot right here. Where's the May pivot? It's right down here, and it touched the 50-day back then, and then went in a very positive move higher. Also, I want you to note something here. Note this uptrend. Note the candles. Just sit back in your seat and note the orderliness. Small candles rising nicely over the 20-day. Same thing back in March and back in February. See how nice and orderly it was? Now look at these candles in the last couple of weeks. Great big red candles, meaning it opened at near the high of the day and then closed near the low of the day in many cases. So that's, the first few candles are definitely a warning system here. So far today, again, we have nearby support is today's low at 528.60, then the May pivot at 518, down to April, May lows down here, at 500 and down at 493. And also we have the 200-day moving average coming here at 499.46. We can just call that 500. So hopefully we don't have to use it, but you know, there is some support, potential support here for moving average support and price support if we need it. I know this is all ugly, but I'm going to be patient here. Before I start buying, I'm going to be patient and wait for the SPY to create some kind of a base or support mechanism or bottom here. Don't know where it will be. I don't know anybody who does. And that might take some time, so we need some patience. August can be a very testy month in the market. I've seen it over and over and over again. So let's get out some patience here again and wait for it to show some signs before we jump into back up the truck and buy a lot of stocks. Our next chart today is the daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that follows our NASDAQ 100, the top 100 non-financial stocks in the NASDAQ stock market. The NASDAQ 100 is home to momentum stocks like NVIDIA, Meta, Apple, Microsoft, and yes, Intel. When I captured this chart today, the QQQ was trading at $447.08, and like the SPY, it is trading at 10% below its recent all-time closing high, back up here on July 10th at $502.96. Now, we know that the Qs are now trading below the 20-day moving average, the red line that's coming in at $478.03. Also, the 50-day moving average coming in at 473.78. So this 20-day move over the 50-day hasn't happened yet. We'll have to see where the Qs can soften their blow. Now we have the 200-day moving average here coming in as potential support at $429.50. Hopefully we don't need it. There it is. Now we do know that since January of this year, the Qs opened it, and it's not on this chart, but the Qs opened at 405.84, and from there up to this high, the Qs gained 18%, and that's a wonderful gain in a year to date. But then it dropped back down again 10%. So what we have now is we have potential near-term resistance at today's high at $453.57. Then yesterday's high and the 50-day moving average up at 473, 474. Then we have near-term support here at 444. We can look back at this May pivot here at 444. Then down at the 200-day moving average, potential support at 429.50. Then the May lows at 420, and the April low at 413. So plenty of support here, potential support, if the Qs choose to use it, okay, if the Qs choose to use it. A lot of people here I've noticed that have gotten into the market in the past 3 or 4 months, some of them and a lot of them have been FOMOs, fear of missing out. And I kind of felt a couple of weeks ago that this market was getting pretty tired. August can be a very difficult month in the market, and I've been through it enough times in the last 20-some years to know it. So when you see it going higher and higher and higher, and then you get this feeling of a lot of FOMO in the market, fear of missing out, you know that something's going to happen. And with everything going on in the world right now and second quarter earnings season, it did. So 2 weeks ago, I mentioned in this space, I was more cautious and I was taking profits on short-term trades because I wanted to be ready for new upcoming opportunities. Now that particular idea worked. Now I'm going to wait for the Qs to reach and confirm a bottom, some kind of place where it honestly is, or certainly looks like it can rally and start higher again. I'm going to do that before I reach into any more tech trades. So using some patience here, letting it play out a little bit, good idea, especially when you see it falling and look at the higher volume here. So at some point it will pick up and start up again, just don't know exactly when. Our final chart today is a daily chart of the Healthcare Select Sector Spider ETF, the XLV. Health has top holdings include Eli Lilly, United Health, Johnson & Johnson, Merck, and AbbVie. Now, as you probably know, if you've been looking at charts, many stocks and ETFs have dropped very hard in the last week or so, and those moves can be unpredictable. So I went through many ETF charts, and I came across the XLV, and I am seeing now, I like this pattern. When I captured this chart today, the XLV was trading at $150.23. This is actually up near all-time highs, is just right here. Now, don't know that it's going to hold it today, but this is the all-time high up here, so that's a good thing. Now, for much of July, when the market was kind of started falling, the XLV walked along just above its 20-day moving average. But of course, you can see that back here, that instead of moving, straight higher like a lot of tech stocks did, of course, the XLV is a defensible trade, a defensive trade. And you know what? That's fine with me. So these stocks didn't move as dramatically higher as tech stocks did, although I do believe that a lot of the healthcare stocks have a lot of technology in them that will benefit from what we have going on in the long term. But I'm looking at this chart, and yes, it's defensive. Also, I know that I do not have to buy anything next week. I can just sit and watch what happens, and that's what I'm going to do. However, the healthcare sector is defensive, and that's fine with me. It's also near its highs right now. If in the coming week, if the SPY behaves reasonably well, now look, if the SPY rolls over in the coming week and starts falling down again, I probably won't get into this healthcare trade. It depends on what happens. But if the XLV stays above the 50-day moving average, the green line, which is coming in at $146.60 at the moment, if it can stay above that line, and call it 147 if you want, I will add a small position of the XLV to my trading portfolio, and I'm going to put a stop in down here under the 50-day at $145.80. I'm not going to give it a lot of room, but I'll give it a little bit. If and when the XLV can rise above 152, and that would be over today's high and these highs that have come in the last couple of weeks, right about here. If it can rise above 152, I will add to my position, and my stop will be a trailing stop. So you may want to keep an eye on the XLV in the coming week. And now check out this news on ToniTurner.com. We've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless trading programs. Trade the Trend to Profits, and that's right here. Trade the Trend to Profits shows you how to enter, manage, and take maximum gains from long-term trades. This is the classic buy low, sell high strategy, and it's one of my favorites. Also, knowing how to read these charts is one reason I said I'm going to take some profits 2 weeks ago, and it worked out really well. So you learn how to look at charts and read them just like that. Our new discounted price for this program is only $127, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. From our ever popular 7 steps to successful trading, how to swing trade successfully. Again, Trade the Trend to Profits, how to read charts, great for novices, 3 winning setups, great for short-term traders. And as you all know, one of my favorites, how to bottom fish like a pro. Again, find out how these timeless online programs can help you earn more money quickly and easily. And once you've purchased, you have unlimited access. You can go at your own pace. So be sure to check them out by going to the link on the screen right up here, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.